This is Horizon's Middle East and Africa. Our top stories this morning. The U.S. and China agree on a preliminary plan to ease trade tensions. Markets are taking the outcome with a pinch of salt, with investors remaining cautious due to a lack of details or a concrete agreement. A U.S. appeals court rules that President Trump can keep his global tariffs in place for now. It's a win for Trump on one of his signature economic policies. And the UK, along with several allies, moved to sanction two far-right Israeli ministers over inciting violence against Palestinians. The U.S. says the move derails Gaza ceasefire efforts. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zapasaja in Johannesburg. Quite a bit of headlines to get to that the markets are still trying to digest this morning, including a bit more clarity on those trade talks between the U.S. and China. And if you take a look at where the markets are positioned right now, seeming to, as we were indicating there, take this with a pinch of salt, treading a bit cautiously. U.S. equity futures marginally lower right now. The S&P future index down about 0.2%. Even after we did see most of the major U.S. indices closing in the green, with the S&P posting its third day of gains on Monday, and still approaching that February high. And yet we're still seeing some downside for S&P futures. Not the same story, though, for the U.S. The Bloomberg dollar, marginally stronger this morning, as is gold right now, holding on to gains up about just over 0.4%. Despite some of the strength that we are seeing from the Bloomberg dollars, it's still seeming like, as we were indicating, investors wanting a bit more clarity, still holding on to the Haven asset, and investors also awaiting that key U.S. bond auction that is going to come on Thursday, potentially directing what the appeal is for gold. And crude falling right now, falling for a second day, down about 0.2% right now. We're also awaiting some more clarity and confirmation on a report about U.S. crude stockpiles, which reportedly are down for a third week. Brent crude right now trading just about $66.74 a barrel. Let's just take a look, though, at the key data point that we're waiting for today, and that is U.S. CPI for May. That will come later today. It's a major economic print that many investors are awaiting. The expectation is that we will see a rise in May year on year and also month on month. And if we do actually see that yearly basis with that increase, it would mark a reversal of a downward trend that we have seen this so far this year, and potentially will change expectations for Fed rate cuts later this year. But that is just a look at the major data print that we are waiting to come later today. Let's get back to our top story, though. Trade talks between the U.S. and China have wrapped up in London with agreement on a framework plan which could revive the flow of sensitive goods between the world's two largest economies.
We have reached a framework to implement the Geneva Consensus and the call between the two presidents.
In the past 2 days, China and the US teams had in-depth exchanges. Our communication is very professional, rational, in-depth and candid. Both sides have agreed in principle to a framework for implementing the phone call between the two leaders on June 5th and the consensus they reached in Geneva.
For more, let's bring in Chief North Asia Correspondent Stephen Engel. So, Steve, we had a bit of info that we did get there, but give us some details on what more we know about this agreement.
Well, they've agreed to talk further, and that they've agreed to go back to the framework agreement that they reached 4 weeks ago in Geneva for that truce that brought down all those sky-high tariffs, both from the United States and from China, that bought some time. But things started unraveling over the last 4 weeks with more export controls from the United States. And what the White House said was China's slow moving on the approval of licenses for critical rare earths and rare earth magnets, with China dominates 70% of rare earth production and 90% of those rare earth magnets. And so bad blood built up. So what this does, it takes the phone call from last week between Xi Jinping and Donald Trump and the marching orders they essentially gave their negotiators and their various agencies and their various working groups to get something agreed to. Now, that framework agreement was reaffirmed over 2 days of talks at Lancaster House in London, near Buckingham Palace. It doesn't necessarily mean an agreement has been reached on rare earths as the United States wants them. It simply says that there were conducive talks, there was a consensus reached, and some trust building. This is what Howard Lutnick had to say, and his assessment of what it ultimately will mean from the U.S. perspective.
We do absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that. Also, there were a number of measures the United States of America put on when those rare earths were not coming. You should expect those to come off sort of, as President Trump said, in a balanced way. When they approve the licenses, then you should expect that our export implementation will come down as well.
And you mentioned that the markets were basically demonstrating a little bit of caution. Well, we had a guest on earlier today here in Asia. He was a former assistant to the U.S. Trade Representative in charge of China, Jeff Moon, and I loved his comment. He essentially said, when the Chinese start using the terminology consensus, that means we are closer to the start of negotiations than to the end of negotiations. So from the Chinese perspective, it simply means they're now about to talk. Maybe we won't get those hard, fast results like Howard Lutnick expects.
Right. And Stephen, that would make perfect sense then why we haven't seen quite a reaction in the market. So then if we are, in fact, at the start potentially of when we're going to see some more breakthroughs, what is it that you're watching for next?
Well, the clock is ticking, obviously, because in 2 months from tomorrow is the deadline of that pause of tariffs, the reprieve, if you will. So we could see, if we don't see noticeable progress from either side, those tariffs from the White House could go up, and the slowdown of export licenses for those critical rare earths and the magnets could slow to a halt. It's all now up to the various agencies, working groups, and dialogue over 2 months. And the clock is even ticking faster, the time frame even shorter for other trading partners of the United States, because their 90-day pause expires in about or less than a month on July 9th. So that's why you're going to see India, Japan, South Korea, and others who feel that they need to move the ball forward on their own negotiations for a trade deal with the White House start to escalate. So time is of the essence. This dialogue in London specifically targeted just the China-U.S. relationship, which has an extra 1 month reprieve. But again, time goes by really quickly if they don't move the ball. So we'll have to see if both of them are in agreement and whether this conducive environment reached overnight in London basically leads to a reestablishment of trust. That's key to the Chinese.
Yeah, a lot to pay attention to there. Bloomberg's Stephen Engel starting us off this morning. Stephen, thanks as always for joining us. Let's stick on the tariffs theme. The U.S. and Mexico are said to be close to a deal that would remove President Trump's 50% tariffs on steel up to a certain volume. Sources say U.S. buyers would be allowed to import Mexican steel duty-free as long as total shipments are below a level based on historical trade volumes. Joining us now is Bloomberg's John Harney. So, John, we were just speaking to Stephen Engel there about a number of deadlines that countries are waiting for. Talk to us about this latest ruling and how it really fits into the broader Trump administration's efforts to instill some of these trade tariffs.
It certainly gives the Trump administration something very valuable here, and that's time to pursue their trade policies and the quest for agreements, along with this framework that Stephen talked about with China, a whole variety. The entire trade agenda will be bolstered by this ruling, and it will eventually, of course, go before the U.S. Supreme Court. But that won't be perhaps for months now, And in the meantime, the July 9th deadline still obtains for these countries, Japan, India, others. So they still have, that puts pressure on them to make a deal. It also gives the president the ability to say that we're going to be making money from tariffs. if a court had ruled against him, that would have put his entire domestic and international agenda in some peril.
And so then what more do we wait for then, John, when it comes to how this moves forward next? The deadlines, as we mentioned, are approaching. What is the key indicator you think that will show us the direction maybe for what this means for the administration's trade policy moving forward?
The agreement with China, whatever it is, with China, this framework, certainly looks very positive for the administration. And you mentioned Mexico. A deal is expected to be close, according to my colleagues Eric Martin and Joe Doe, over steel tariffs, which would remove the 50% levies on Mexico, something that Mexican President Claudia Sheinbaum had sought. So that would provide, if you will, some momentum that could well encourage other countries to perhaps make their own offers and to speed up these talks as the deadline approaches.
All right, Bloomberg's John Harney. John, thanks so much for staying up late for us. Great to have you on. Appreciate it. Still ahead, Saxo Bank says markets are unlikely to buy into the optimism of U.S.-China negotiations in London. More on their investment strategy next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian stocks have seen only a moderate bump from the so-called framework trade agreement the U.S. and China have agreed to in London, and U.S. stock futures remaining in the red. Joining us now is Damian Hitchen, regional head for APAC and MENA at Saxo Bank. Damian, let's just get into this so-called framework. Talk to us about why aren't we seeing any sort of direction right now with markets? Was this maybe not enough to give any sort of indication for where these talks go next?
Good morning, Jennifer. I think the lack of reaction so far suggests that the outcome that we're seeing at this juncture is completely expected. We've had some positive sound bites, particularly in the last few hours from Commerce Secretary Lutnick about the talks and the framing of a heads of agreement and a framework to move forward. But it's worthwhile to note that no new deal has been made, nor has the US-China truce been extended past the original date in mid-August of this year. So details at this point remain far and few between. There is some overall sentiment, positive, that could offer some short-term relief, but markets are really unlikely to buy into material optimism, in our view, without real structural progress, and that takes time.
What would that structural progress be then for you, Damian?
I think what we'll probably see in the next days and weeks is that there's some low-hanging fruit that will be good news for markets, but also good news for both parties, obviously looking for a win-win outcome of this. That might be tactical issues such as loosening of export controls on semiconductors, on rare earth minerals, student visas, etc. But that really doesn't get to the heart of the larger strategic issues, and that certainly doesn't get resolved in a meeting or two. And hence, markets are already in a fairly desensitized period at present, certainly over the last period during May and going into June. So I don't think we're going to see a real reaction from markets unless something material comes through from the negotiations. And when we say material, that's more in terms of structural deals, in terms of the trading relationship between the US and China. And as I mentioned earlier, that's unlikely based on history and our knowledge of how these trade negotiations progress. That's unlikely to happen in the short term. That's very much more of a medium to long term perspective.
If we're not going to see that, Damian, in the short term, what is the next catalyst for markets? We mentioned US CPI is coming later today. Is that the next indicator that could potentially move markets in a different direction?
I think that's probably the most likely to do so short term. As we know, the US macro fundamentals are quite strong. We saw very positive non-farm payrolls data on Friday. CPI data is coming out today, and that really could be the first indicator that we see a reflection of tariffs and tariffs coming into the economy, or the real economy. The expectation today is for a minor increase from a reading of 2.3 to 2.4. But within that, whilst goods inflation might show a small uptick, service disinflation could also negate this. So we might be looking for a more muted headline number there. What we will need to do is look deeper into the numbers, into the sub-cohorts for further direction on the market. So we could see a reaction to the CPI number today, but given the fact that the expectation is for a very minor increase, again, it's unlikely in our view to cause a major directional shift in markets.
Damian, I also wanted to get your take on gold and some of the price action that we have seen there. We mentioned the dollar is stronger today, as is gold, and yet, we're still waiting to see, again, another catalyst there. Do you believe that gold will continue to strengthen even despite an easing potentially of trade tensions between the U.S. and some of its biggest trading partners?
Well, it's an interesting story developing around it. And when we look at gold, we also look at that in terms of other commodities as well. So gold prices have been stalling for a while now, whilst interestingly, we've seen silver surging. So in terms of gold's momentum, obviously gold does move on the back of geopolitical instability. Central banks have been buying up gold. Investors have been moving into gold as a safe haven within their portfolios. But we have seen a little bit of a pause from gold on that. And I don't see, unless we see any major negative directions from the trade talks, not just with the US-China, but also US with the other major trading partners around the world. Our view on gold is in a little bit of a holding pattern. Silver is interesting because it's half industrial and half investor optimism to really start pushing silver as a safe haven. And really, we've seen a little bit of movement in silver over the last few days. For at the moment, we're seeing silver starting to rally and catch up with gold. And for us, that's a more interesting short to medium term story at present.
Will you look to the bond auction in the U.S. tomorrow potentially as another directional factor that could sway the interest for metals like gold and silver?
Potentially, yes. But as I mentioned earlier, investors and markets are pretty desensitized at the moment. So what we're seeing is a lot of minor data inputs coming into the marketplace, but we really don't believe that they will cause material market shifts and changes in volatility as we saw in April following Liberation Day. So whilst obviously all of this data is important and it provides a trend, we don't really see that any of these individual data points at present are going to produce what we see in terms of an increased volatility following, as we saw, following Liberation Day.
Fascinating insights there. Damian Hitchen, Regional Head of APAC and MENA at Saxo Bank, joining us there from Dubai. Damian, great to speak to you. Thanks so much. Now, coming up, the UK and other allies sanctioned 2 Israeli cabinet members, which has been criticized by the U.S. We discuss the significance of this move a bit later in the show. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. California Governor Gavin Newsom accused President Donald Trump of misusing his power by mobilizing troops in Los Angeles. Newsom also warned other states to prepare for similar unrest. That's as protests over immigration raids stretched into a 5th night and led to a curfew in parts of the city's downtown.
California may be first, but it clearly will not end here. Other states are next. Democracy is next. Democracy is under assault before our eyes. This moment we have feared has arrived.
Marines deployed by President Donald Trump arrived in the Los Angeles area with orders to protect federal property and officers as the city is gripped by tensions over anti-deportation protests. Bloomberg has learned that Treasury Secretary Scott Bessent is emerging as a serious contender to succeed Jerome Powell as the next Fed chair. Our sources say several advisors close to President Trump are pushing him to appoint Bessent, when Powell's term ends in May of next year. Whoever the Senate confirms for the post will have to prove that the Fed's independence from political meddling remains intact. Trump has regularly complained that Powell has been too reluctant to cut borrowing costs. The president has also said that he should have a say on rate decisions, raising questions over whether markets would see the next pick as beholden to him. The Trump administration will propose scrapping Biden-era climate mandates requiring power plants to curb greenhouse gas emissions. Sources say the Environmental Protection Agency is also planning to unwind limits on mercury and other toxic air pollution from the facilities. We're told the aim is to prioritize domestic energy development amid a surge in power demand from AI. The European Union is poised to remove the UAE from its list of countries that pose a high risk for money laundering. The European Commission says it took the UAE off its list of high-risk jurisdictions, and now the change needs approval from EU member states and the European Parliament. The removal would satisfy a demand from the UAE, which has previously raised its concerns about its inclusion on the so-called blacklist. And let's take a look at where your markets are positioned. Quite a bit of red on the screen, a bit of negativity, that coming even despite what we have been seeing as potentially a breakthrough in U.S.-China trade talks. S&P futures and also NASDAQ futures down over 0.2% there, despite closing in the green, as is Dow Futures Index. Eurostock 50 futures also looking weaker there, about 0.3%. And yet we're still waiting for investors to digest a number of headlines, including, we mentioned, those talks coming overnight, and also U.S. CPI print that we will get later today. Let's also take a look at where we are seeing commodities as of right now. Oil right now also a touch weaker. Oil, Brent crude right now down just about 0.2% there to $66.75 a barrel. A lot of questions over what the supply-demand picture looks like in the market. Now, coming up, Barings says sound reforms and structural improvements have put emerging market nations in a stronger position to weather volatility. More on their outlook for markets next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. The U.S. and China agree on a preliminary plan to ease trade tensions. Markets are taking the outcome with a pinch of salt, with investors remaining cautious due to a lack of details or a concrete agreement. A U.S. appeals court rules that President Trump can keep his global tariffs in place for now. It's a win for Trump on one of his signature economic policies. And the UK, along with several allies, moved to sanction two far-right Israeli ministers over inciting violence against Palestinians. The U.S. says the move derails Gaza ceasefire efforts. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Quite a bit of headlines that the markets are trying to digest, including that news overnight that the U.S. and China have agreed in principle, as well as just some recent news that we have gotten, and that is from Japan's Minister of Finance, who is saying that potentially the Japanese government is mulling buying back some super long bonds, but also indicating potentially that the July bond buyback speculation is unrealistic. We have the dollar-yen up there on the screen right now. The dollar still a bit firmer, but we are seeing the yen pair losses against the dollar since those comments came out. Also, S&P futures weaker right now off the back of still quite a bit of confusion and still questions over really what this U.S.-China trade agreement means, weaker by about 0.2% there, and yet still approaching a February high as far as the S&P index goes. Gold is also stronger still right now, holding on to some of those gains, despite what we are seeing is potentially an easing of tensions. Gold right now firmer by about 0.5% there. And investors are still waiting some clarity on the U.S. bond auction that is coming on Thursday, although our previous guest saying that no single data point potentially will give any sort of clear direction for the market. So potential that safe haven asset is still appealing for many investors. And finally, Brent crude weaker, down for a second day right now to trade to about $66.76 a barrel. We're also waiting for confirmation on a report about U.S. crude stockpiles, which reportedly are down for a third week, again, bringing more questions about potential supply demand in the markets. And let's just take a quick look at the major economic print that we are waiting later today. That is that U.S. CPI print. Forecasters expecting the U.S. CPI to rise in May, that showing what that print indicating what that print will show. And on a yearly basis, the estimated increase is potentially going to mark a reversal of a downward trend that we've seen, again, potentially questioning what that means for the Fed later this year. Now, Blackstone plans to invest as much as $500 billion in Europe over the next decade, underlining the continent's growing appeal to investors during a period of geopolitical flux. In a wide-ranging interview, Chairman and CEO Steve Schwarzman also spoke to Bloomberg TV about AI, deal-making, and the impact of tariffs on the economy.
We have a very positive view of the future here in Europe. We think we're going to be able to invest $500 billion over the next decade in Europe. We see it as a major opportunity for us. They're starting to change their approach here. We view the tariff situation generally as something that will be resolved over the next 6 to 9 months. And there are negotiations going on with lots of different countries. They'll happen at their own pace. It doesn't have a huge impact on inflation in terms of global growth. There may be a few tenths of a percent of change, but overall, it's something the world can absorb.
Now, the MSCI Emerging Markets Index gained for a 6th day as investors monitored trade negotiations while awaiting U.S. inflation data that may shift bets on Fed rate cuts. Joining us now is Barings head of EMEA Corporate Credit and Emerging Markets Corporate Debt, Omotunde Lawal, joining us from London. Omotunde, wonderful to have you on. Let's just take a look at some of the developments that we got overnight and the reaction in the markets. Are you surprised that we're not seeing more of a reaction, or are you also waiting for a bit more clarity about what this means?
Good morning, and thank you for having me. So, yes, very much. I'm not surprised that the markets aren't reacting so much here because we've had a lot of these stop-starts with some of these negotiations and some of these headlines. And I think the market is just generally trying to play it cautious because there seems to be a lot of talk around these negotiations, but we're not seeing very much actual result coming through. I mean, since the sort of first week of April, we've had the talk of talks happening, but actually not a lot of results. So I think that's probably why the market is playing it cautious, because it does seem like it's going to take a little bit more for us to actually see concrete results. It doesn't seem like, there's that much of a good faith necessarily in the negotiations just yet, or at least ones that are yielding tangible results.
And yet, Omotunde, you still believe that EM is well positioned to weather whatever volatility brings next. Can you explain that a bit more?
Yeah, so the rationale there is, as we've seen with the uncertainty that the U.S. has, the current administration has brought to proceedings, we've had, unprecedented amounts of volatility in the risk-free rate. We've had unprecedented uncertainty or volatility around U.S. policy, just around things in the U.S. And that leads itself to sort of make investors think about how certain is the macro backdrop that you're deploying your dollar in. There was a stat that we quoted a couple of weeks ago from one of the Qatar conferences, which said for every dollar that's been invested over the last 5 years, 80 cents of that has been going to the US. And so if you're a CIO, if you're an investor now, and that macro backdrop where 80 cents of your dollar usually went to is uncertain, you are sort of beholden to think about other places to diversify to. And I think that's where emerging markets and Europe and other regions, as the Blackstone guys were saying, that's where these things come into play, where you start to think, okay, well, what's going on in other parts of the world? So this 20 cents that I'm deploying, could it be 30 cents instead, for example? And that's where emerging markets really come into their own, because there's 70 plus other countries with probably more stable backdrops, more sort of stable inflation dynamics as well, right? Because again, with the US, we're not entirely certain how the second half will play out in terms of inflation dynamics. We don't know what's going on with the fiscal situation. We've had the downgrades come through, but we really don't know what else is going on. We've got the current protests going on in California. We don't know where that spreads to or what else happens. So again, I think that opens opportunities for places like emerging markets. You take the GCC, for example, it's a very stable region. We've got, inflation is not necessarily a big problem, and they don't have direct impact from the current tariff issues that are going on, current tariff negotiations. Yes, they have the indirect impact from lower commodity prices, but again, a lot of those countries are starting to transition their economies, weaning them off sort of huge hydrocarbon dependencies. You take Saudi, for example, we've seen huge amounts of diversification in the economy. Take the UAE as well, Dubai, for example, has never really been a hydrocarbon story either. So there's lots of pockets of places that are not necessarily as vulnerable to tariffs within emerging markets that are worth taking a look at.
Where exactly, Omotunde, do you find the best opportunities? Are you looking to sovereign debt? Are you looking to corporates? Where are you seeing in EMs maybe the most opportunity?
So I work within corporate debt specifically. So I look at quasi-sovereigns and I look at corporates. So I see best value there because from a spread perspective or yield perspective, you are getting paid much more than the sovereign in most cases. And so for me, within the sort of Middle East, for example, where I see as a stable jurisdiction, we like Saudi exposure. We've had a lot of supply coming out of the Saudi banks. Yes, there's a lot of credit growth, and yes, there's a lot of exposure to the giga projects as well as real estate. But we think this is happening in a very measured manner. We like Qatar, for example. We like the gas economy there. We like the banks are very solid. The UAE in general has very good credit growth. So we like the financial sector there. We've had real estate growth as well within the GCC, both within Saudi as well as within Dubai as well. That's been very good. The consumer sector as well. There are companies like Almarai. There's companies like Tabrid. These are all very good companies that we see very good value in. Even within the MENA, broader MENA region, if you added Turkey into that, we've seen sort of much more orthodox policies coming through from the Turkish sort of bucket as well. And that's helping with the attractiveness of Turkish corporates as well. So again, within the Turkish economy, the banks, we like the banks there. We like some of the domestic-facing companies there rather than the exporters.
Really great to get you on this morning. Thanks so much. Barings head of EMEA Corporate Credit and Emerging Markets Corporate Debt, Omotunde Lawal, joining us there in London. Great to speak with you, Omotunde. Thanks so much. Now, the UK government, along with some allies, have sanctioned 2 Israeli government ministers. In a joint statement with Australia, Canada, New Zealand and Norway, the UK says comments by Itamar Ben-Gvir and Bezalel Smotrich have incited violence against Palestinians. The sanctions include asset freezes and travel bans. Joining us now is Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, joining us there in Dubai. Stuart, how significant are these sanctions?
Good morning. So, I think in terms of the sort of the day-to-day, what it means for both of these ministers, probably not very much, quite symbolic in the sense that I don't think either of them were probably planning on travelling to either of these places. I doubt either of them have assets in any of these jurisdictions. So the immediate impact, I suspect, is limited. However, again, thinking about the symbolic, it is quite important, I would say, and signals a continuing trend that we've seen over the last several weeks, where at least some of the European nations and some of their allies are in trying to find a path where they can, on the one hand, try and constrain the Israeli government in terms of its actions, particularly in Gaza and the West Bank, but at the same time not take a hard line against them. So in other words, they're trying to find that middle path where they're constraining them, but also making it very clear, as the British Prime Minister has, that Israel has the absolute right to defend itself, and they understand why this war erupted in the first place. But it shows, I think, a crack going on now between the Western allies in terms of their approach to Israel.
And especially when it comes to the U.S. We heard from Secretary of State Marco Rubio criticizing the move, saying it doesn't actually advance ceasefire efforts. Could this potentially, again, derail efforts to reach a ceasefire?
Yeah, I mean, I think you're quite right in terms of seeing that gap emerging and widening now between particularly the Europeans and the US. But in terms of does it derail the peace process, probably not. It doesn't seem to affect that. I mean, obviously there is pressure coming in from the European allies and others. I'm not sure the Israeli government is paying much attention to that pressure. And you saw Netanyahu, the Israeli Prime Minister, come out yesterday and said that there had been progress. Now, he was quite cautious and quite cagey about what that progress looked like, but it's interesting that, you know, he felt the need to say something publicly about progress of some sort being made.
Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, joining us there in Dubai. Thanks so much, Stuart. Always great to have you on. Now, for a look at some of the other stories we're following this morning, Russia is stepping up drone attacks on Ukrainian cities as Moscow pressures Kyiv to accept its war demands. Ukraine's president says Russia fired 315 drones and 7 missiles on Tuesday night, targeting Kyiv and the Black Sea city of Odessa. Ukraine estimates Russia is preparing to produce up to 350 long-range drones a day and aims to raise output to 500 a day. The EU has proposed export bans to deprive Russia of critical technologies and goods used in producing drones, missiles, and other weapons. At least 19 bomb blasts have rocked southwest Colombia just days after the attempted assassination of presidential candidate Miguel Uribe. Police say at least 4 people were killed. Attacks included an explosion near a police station in Cali, the country's 3rd biggest city. The government blames what it calls international mafia for both the bomb attacks and the assassination attempt. And NATO allies are considering allowing contributions to Ukraine's defense in new spending targeted in the new spending target to be adopted at a leaders summit later this month. Sources say Secretary General Mark Rutte is seeking to keep the U.S. fully engaged by getting member states to allocate at least 5% of GDP for defense spending. Trump has said he'll attend the summit in the Netherlands. Now, coming up, South Africa proposes policy changes that could pave the way for Elon Musk's Starlink to begin operating in the country. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The decision to award Elon Musk's Starlink an operating license in South Africa will rest with the country's industry regulator. It follows proposed changes to regulations that would allow Musk's satellite company and other providers to qualify for licenses without meeting empowerment laws. For more, I'm joined by Bloomberg's Loni Prinsloo, who's been following this story. Loni, talk to us about what the holdup has been really behind Starlink not being able to operate here. It's been a very strong issue for Elon Musk in particular.
Yeah, so Elon is, of course, South African born, and the rules in South Africa currently says in the ICT sector that you have to sort of give away equity. So you have to give 30% of your company to black people, and Elon has refused to consider that option of giving away equity in his company. So South Africa has been working on a sort of workaround this black ownership option. There's something called equity equivalent. So you still invest in black businesses, but not giving away equity in your own company. But you invest in black businesses and infrastructure in the sector, in the country.
And this has been a big issue for many people who have been obviously living here and also following a lot of these laws for a while. How long do we think it's going to take to actually be resolved?
So the minister has proposed this sort of change in the rule. It's been met with a lot of sort of pushback from other lawmakers. So it will take a couple of months. Currently, they're in a process where they're going to take public sort of comments. That will take about 30 days. And then from there, at the fastest sort of pace, about 6 more months. But it has received some pushback from other lawmakers.
Do we think it's been used as a bargaining chip potentially when we talk about negotiations between Cyril Ramaphosa, the U.S. president, and also President Trump, who was up until last week close allies with Elon Musk?
Yes. So I don't know if that changes anything if they are not close allies anymore, but it was used as sort of like a bargaining chip. It didn't form part of their trade deal, but it was used as a bargaining chip that Elon could then, they would change the rules and Elon could start operating here. We will see if this is still so hot, but definitely the workaround was proposed at that meeting in Washington.
I see. And Loni, can you put into context Starlink and its operations around the continent? Because again, Elon Musk has talked about how it's been growing across the continent, and the only place where he is born, he's not able to operate it here. Well, where else are we seeing operations across the continent and the region?
So it's about 18 countries currently. The biggest being Nigeria. Most recently, they started in Congo. Many of our neighbouring countries have started, like Zimbabwe and Botswana. Yeah, so lots of those countries did actually also ease their regulations around licensing for them to operate. So it's doing well. Africa has a bit of a connection problem. It's very expensive to roll out connectivity to rural areas. So if you can get it, it's often a cheaper option if you want to connect rural Africa. So so we are waiting to see how this plays out. Lots of people are hoping that it will come. Other people are like, no, we're not relaxing our rules for this.
Yeah, we'll wait to see how those negotiations play out. Bloomberg's Loni Prinsloo joining us here. Loni, thanks so much for being with us in studio. Now, here's a look at some of the other stories we're following from the region. Zambia's economy will expand at least 6% this year due to improved rainfall and higher metal production. The nation's finance minister is confident of reaching the growth target, which would be the highest since 2021, and expects positive growth every year for the next 10 to 15 years. Ghana's government is urging nurses to end their strike and accept a wage deal that would be implemented next year to prevent unplanned budget slippages. The government says the nurses' demands would add over 2 billion cedis to the compensation in the year's budget, which it says would throw the budget and economy out of gear. Ghana is operating on a tight budget with significant expenditure cuts, leaving little room for maneuver this year. Now, coming up, Zara parent Inditex reports earnings this morning. We'll take a look at how mid-tier luxury brands are weathering the current economic uncertainty. That's next. This is Bloomberg. Zara parent Inditex reports earnings this morning, with analysts focusing on how trade tensions are affecting the retailer. Charlie Wells is here with an update. Charlie, what exactly are investors looking out for in the numbers that we're expecting to come in just a few hours?
Jen, so it should be really interesting, and really those trade issues should be front and center because fast fashion is so exposed on that trade front given the nature of, the consumer and the thin margins in this industry. But this actually could be an area where Inditex has a pretty strong story to tell because relative to a lot of their peers, they actually have less China exposure. So that could potentially be a boost for them. They have that famously integrated supply chain. But what has been really interesting for Inditex is they really rode that kind of post-pandemic retail recovery. They really kind of, were benefiting from a consumer that was really looking to refresh their wardrobes. But actually, over the past few quarters, we've seen this revenue growth slow down. So that could be something that the company has to address. Given the consumer has been under significant pressure around different parts of the globe, there is a lot of geographic diversity for this company, which has been a boost, but also could actually provide something of a headwind as we've seen a number of economies come under strain. So these are some of the factors that we're really looking out for today.
How might this performance, though, Charlie, compare with some of the other brands that we've been watching closely in the fashion and retail sector?
Well, one thing that investors have really been asking over the past few weeks, as a lot of these retail earnings have come in, is what is the narrative that we're seeing in the fashion sector? And we're actually seeing a sort of three-track approach here, where some of these ultra high-end brands have actually been struggling as far as share price performance, the likes of Kering, the likes of LVMH. We've also seen some of these fast fashion retailers, H&M, struggling a little bit too. We've seen something of a midway for the likes of, say, Inditex. And actually, it is these kind of mid-range brands, the likes of Tapestry, the parent company of Michael Kors, of Kate Spade, that have been performing well. Similar there too, Ralph Lauren. And this really seems to be telling the story of a consumer that's kind of looking for value. They're looking for, you know, products that aren't as expensive as some of these high-end luxury firms are offering, but that still provide something of a value proposition at a price point that's a little bit more affordable. So these Inditex earnings should help kind of build into this narrative, seeing how they perform relative to some of those mid-tier brands. So I think that is a story that we're really going to be focusing in on as these earnings from Inditex come in just a few moments.
That's great. Potentially that bodes well for the industry. Bloomberg's Charlie Wells. Charlie, thanks so much for joining us. Let's just take a quick check at markets right now. Negativity on the screen as investors are still trying to digest a number of headlines. That's it for Horizons Middle East and Africa. Daybreak Europe is next.